and welcome. You're watching Closing Trades from the SBI Live studio here at ET Now. I am Snehi Shah, and this is a roundup of the day that we've seen so far. 1 hour of trade left for the day as well as for the week. So let's just quickly take a look at what the markets are up to right now. You do have the Nifty 50 at 24,330 thereabouts. So that's a solid cut that we've seen from the day's highest point coming in for the Nifty 50. 0.3% cut coming in 85 points lower. A nominal recovery from the day's low, but nothing significant. So, well, we are deep in the red right now. Sensex to about 0.5% lower. It's actually the Nifty Bank that's slightly even more lower. 0.5% cut coming over there. A 260 point drop coming in on the Nifty Bank as we speak. India Wix is back up above 10, or in fact just at that 10 mark for India Wix. So you have a 1% uptick coming over there. But the show stealer in today's trade have been the Adani group of stocks after SEBI has cleared off all the Hindenburg allegations against Adani, and that's the reason why Adani Enterprises, Adani Power, Energy, Adani Green, and Adani Total Gas, that is, lots of stocks are doing well from the entire Adani basket. Adani Power being the top gainer, a 13% solid uptick coming in for the Adani names. Other than that, you have Eicher Motors, Shriram Finance, SBI Life, Bharti Airtel, SBI doing well on the Nifty side. On the flip side, from the Nifty basket, you do have HCL Tech, ICICI Bank, Trent, Titan, Nestle, Kotak Bank that are under some pressure. So it's entirely this consumption pack that's under pressure. You have IT, that's your top sectoral loser today, followed by banks, FMCG, and media and auto, that's in the red. But on the flip side, big moves coming in from PSU banks once again finding their shine in today's trade. You have Union Bank and UCO Bank that are up more than 2% each, followed by energy, realty, pharma and metals. So that is the take on the market. Some more stocks that are in focus. Paytm, after they discontinued that rent payment feature on their app, that stock is down about 5% as we speak. So deep cut in fact coming in for Paytm also today, and that stock under some pressure. Other than that, when we talk about the top losers today, it's Godrej Industries down 3.5%, along with Piramal Enterprises, Coromandel International, Imami. So it's actually a mixed bag coming in, but largely the consumption theme, be it staples, retail, travel and tourism, the likes of chalet hotels, they are also in the red right now. So that is what the setup is looking like. And let's talk more about where the trading week is almost at an end, but where the remainder of the trading day is headed and what we can expect to see in trade next week. And to do that, we have Kunal Bothra joining us in the studio, and on the fundamentals we have Sudeep Bandyopadhyay, market expert. Good afternoon to both you gentlemen. Kunal, let's start with you. What started off slightly okay has now slipped into the red, and we have been below that 25,350 mark ever since the midday mark of the day. So give us a sense of where are you seeing the markets headed, and for how long are we expected to be in this phase once again?
Yeah, so I think we are in the phase of a market consolidating just around that 25,000 to 25,500 range for the Nifty yesterday as well as today. I think what we are seeing is just trimming off gains for many individual stocks as well as the indices from the respective highs. The indicators were slightly overbought when we were looking at the markets yesterday in the beginning, when the index had come back to that 25,500-ish kind of levels. So I think in that sense, we're just about going through a phase of the markets consolidating. The sector mix is still quite strong. So you're pointing out to a few sectors like the PSU banking themes. You've seen many of the individual auto stocks making a comeback. Pharma stocks, individually large cap names, are making a strong comeback for themselves. And then the Adani group of names, etc., which have done reasonably well. So when the market keeps on finding themes and sectors to pick up in every pace of the movement upside, that generally indicates that we are looking at a trend being built up on the indices. So net, the view is still positive for the Nifty as well as for the Bank Nifty. But yeah, a couple of days of consolidation which we may have to go through.
Okay, so a couple of days of consolidation still is something that we're expecting, at least on the technicals. Sudeep, hi, good afternoon and welcome to Closing Trades. Give us your reading of the market, because every single day we are seeing a new sector that's leading the market. And today it's once again PSU banks that were up about day before yesterday or 2 days ago, and they were doing well. Slipped yesterday, were the top sectoral loser, and once again have found their footing. What do you have to make of a market that is so volatile and is seeing sector churn to such an extent?
Well, I think, you have to look at it from a holistic point of view. Last 10, 12 days, the market has been going up, inching up. I mean, it's not been a massive rally, but it has been continuously going up. So after 10, 12 days of upswing in the market, I think a bit of consolidation, breather is good for the health of the market. So I don't mind this consolidation, little bit of profit booking, which is happening today. And I think that's par for the course. Having said that, sectoral churn is the name of the game because there is no, the specific trend emerging as things stand. Corporate results have been done with, it's only news flow based action in multiple counters and multiple sectors, which is what we've been witnessing for the last few days. And I think this trend will continue. As far as specifically PSU banks are concerned, we always felt that I think there is a valuation opportunity, valuation gap as far as PSU banks and private sector banks are concerned. And at some point of time, I think that gap will get bridged to an extent. It won't, be one is to one, but there little bit of catching up will be done by the PSU banking space, and that's what is happening, is what we believe.
All right, so that's the take coming in on the sector churning that is underway, and especially the PSU banks. Definitely, they're doing very well. But one such stock that is in focus today is actually Kaynes Technologies. We actually spoke with the management as well to understand more on that. But the news flow today is that Kaynes Tech CEO Rajesh Sharma has actually stepped down to pursue the opportunities outside the company, and we caught up with the management of the company to decode the same. Let's listen into what he had to say.
This company has already put in place a plan to grow the company to about a $2 billion mark by FY30. So in the process, many appointments have already been finalized, and you'll start seeing them taking charge of different activities, both functionally as well as business-wise. And the way our company is configured is that each CEO is responsible for delivering the performance and growth objectives in their respective areas. Like North American CEO, the Canadian CEO is the person. For Semicon, there is another person. For Circuits, there is another person. Within Kaynes Technology, there are different business units and plant heads who have their work cut out and so on. So from that perspective, we always, and also most of the decisions and most of the reviews are all done jointly. Mr. Ramesh is fully in charge and completely in sync with the operations as he has been doing for last 3-4 decades. And it's unfortunate that this resignation has come at this time. But then in a company's growth, there are these things that happen. Some one or people go, and then we always oversize the company. So we always have within the company and from other resources, and the people who we identify, we observe them outside the company for some time, and because these are all important positions. And then once they are onboarded, you'll shortly hear next week. So we already know what to expect and so on.
We have an action plan immediately, the next person to take over. And there are some more changes in the management. I'm shuffling because there is an expansion in the company in a big way. Company growths are bigger, so I wanted to expand my management team. So these are all part of that. Having said that, you will shortly, in a couple of days, will come to know the next person who is joining, who will be taking over many of these roles.
Raniti now, and you're catching us live from SBI Live Studios, and we are discussing the market and the outlook with our whole host of experts. And let me welcome Saumil Mehta on the show as well. Hi Saumil, good afternoon and good to be speaking with you. The markets are seen to be taking a little bit of breather after that fantastic run-up we have seen all throughout the week. Firstly, help us with the levels that you are watching out for, and what's your outlook on the markets?
Good afternoon to everyone. My outlook still remains positive. In the short term, in the medium term outlook, the view is positive. Buy on decline should be the strategy. The only thing which I have been mentioning and I've been I want to mention is that we need to focus more on sector-specific and stock-specific rotations. Sector-specific rotation focus will give us good quality stocks to trade, invest both. Nifty, if we talk about Nifty, the crucial support in the very short term is 25,170. That is the first support for the markets, and the second support is at around 20 daily moving average, which is 24,900. So these are the two levels which we need to watch out for, and these are very crucial levels to keep a note of. This targets for Nifty would be 25,670. That is my first target. And the second target would be the all-time highs, which I'm expecting in the medium-term outlook. In Bank Nifty, very similar. There could be a breather, but the view still remains positive. Buy on decline should be the strategy. First support is at 55,100, which is 40 daily moving average, and the second support is at 54,560. This is the 20 daily moving average. So definitely, buy on decline should be the strategy. In the coming days, if I look at ICICI Bank, HDFC, all of these stocks, I think this Bank Nifty should outperform Nifty. So my targets on the upside for Bank Nifty would be 56,170. That will be my short-term target. And the medium-term target is around 57,300.
Okay, so those are the levels to watch out for on Nifty as well as Nifty Bank, according to Somil. But Sudeep, give us your sense on the IT pack. Now, this is a space where we've seen a lot of action over the course of the week. And despite the cut that we're seeing today, it is still touted to end the week with a gain of about 1%. Does today's move in IT make you want to rethink strategy in IT, or as we've interacted with a lot of analysts before, now that they're seeing some renewed optimism on IT after this recent run-up, do you believe that is here to stay, or do you believe IT is still a little bit of an unsafe territory right now?
Well, I still believe that there are a lot of challenges in the technology sector overall. And as far as Indian listed IT companies are concerned, I don't think they are out of the woods yet. The excitement has been on the back of the fact that Indian currency has depreciated sharply, and any currency depreciation from their perspective helps their revenue, because they earn in dollars and foreign currency, so it does help them. So that's point number one. Point number two, the interest rate reduction cycle in US has started, with Fed cutting rate by 25 basis point, and probably the indications are also coming that there may be more cuts going forward as the labor market continues to remain weak in US. Now that again does help IT companies, because the expectation is that loose money monetary policy will facilitate more spending by corporates in US, which in turn will result in renewal of contracts, incremental contracts, and kind of unlocking of stalled contracts. So this creates the optimism. But having said that, I think fundamentally there are some challenges as far as Indian IT companies are concerned, with AI coming and becoming the big thing in US and also world over. I suppose, and my guess is Indian IT companies are some distance away from being present in that space, and I think they will lose out some business going forward. Also, the margins will be under pressure because of the implementation of AI, because that tool will give the kind of companies a possibility of reducing the rates for IT services of Indian companies. So I think we'll have to watch this space carefully, but no need to jump into IT. Specific IT companies which are catering to sectors like travel and tourism, automobiles, these can be looked at, because there is momentum in those particular sectors, and these service providers will be in demand.
All right, so that's the take coming in on the IT space. Let's watch out for that. But with this, let's also shift focus to India's ethanol production, where sentiment in the sugar industry has soured amid the pricing concerns and the policy uncertainty. And adding to the pressure, grain-based ethanol production is surging, with rise in the maize output hitting record highs in FY25 and set to climb further in FY26. So what does this shift mean for the industries and India's ethanol industry specifically? Let me take it across to Ashesha for more details.
today in particular, we put the spotlight on India's sugar and grain-based ethanol manufacturing sector because India's ethanol blending program is clearly seeing some shifts. Let's put it into numbers for you. Remember earlier, India's ethanol blending program was dominated by sugar cane-based ethanol manufacturing, but the trend is now clearly changing, and now grain-based ethanol manufacturers are taking the lead. In fact, as a percentage of total ethanol manufactured in India, nearly 70% now comes from grain-based manufacturing versus 27% earlier. And this because grain manufacturing itself, grain crop production itself has risen in India both for rice and for other grains, and that is the reason we have seen this kind of surge. Now remember, buffer stock and record crop of both maize and several other crops continues to remain in focus, and that is aiding the up move. Now in FY25, rice output stood at 150 million tons versus a 10-year average of about 120. So this clearly has seen an uptick. In fact, this is only set to rise further in FY26 as well, and the same story goes with maize as well. So clearly production has risen, and this is on account of increase in crop production that we have seen in India over the last few years. Now let's also put the spotlight on sugar mills then. Pricing has always been a concern. Remember, ethanol prices have not been hiked for the last several years. Minimum sale price on sugar was last revised in 2018. So these continue to remain a concern for India's sugar industry. Grain-based ethanol manufacturer is now dominating the industry, and demand for sugar-based production of ethanol has steadily fallen over the last few years. This also means that demand for sugarcane is impacting mills' revenue and profitability going forward, and 70% of blending program was sugarcane based earlier, and this has now fallen to below 30% mark. So clearly we are seeing shift in dynamics. Grain-based ethanol manufacturers are now taking the lead as far as India's ethanol blending program is concerned.
Overall, the ethanol policy is an agrarian-focused policy, and since over 60% of India's population is still agrarian, this is not necessarily a competition between grain and sugar. And I'd also like to clarify that I don't think the demand for sugarcane ethanol has come down. It's just that we're in the months right now where most sugar mills across India are closed. So hence, you see a greater supply coming in from the grain-based distillers.
I believe for having a decent diversion next year, the price correction is very important. And also, since the farmer payments are connected with this, I'm sure government will definitely look into this and do a price revision as soon as possible. It's absolutely safe for the vehicles. There has not been any case where the vehicles have seen any damage because of E20. There have been tests done by ARAI. OEMs, OMCs, testing agencies all have gone on record saying that E20 is absolutely safe for the vehicle. So I don't really think that there is any issue going forward.
Satvik Green Energy Limited.
Back with closing trades, about half an hour of trade left for the day as well as the week. And before the break, my colleague Ashesha was talking to us about how there have been changes in ethanol blending, and the entire sugar industry is back in focus. Sudeep, your view on commodities like sugar, and lots of stocks have been in focus of late on the back of this ethanol blending story. But what's your take on the space overall, and if any stocks you're liking from this basket?
First thing, I think, this sugarcane industry and grain, I don't think they're competing. The market is large enough, and the government will definitely, ensure that there is a balance. Also, we have to remember that sugarcane is an extremely sensitive commodity. The government keeps monitoring because on one hand, there are retail prices, the other hand, there are farmers. And of course, there is an export angle, global markets angle. So they do the balancing act pretty well, and they have to continuously keep doing that. And we have to keep that in mind, number one. Number two, I think as far as sugar industry is concerned, because of the nature of and the sensitivity of the sugarcane prices, as well as the farmer payments and the retail sugar price, government keeps changing regulations and changing guidelines and export quotas and things like that. So the counters remain volatile and keeps the price keeps moving up and down. So if as an investor you're able to withstand volatility, then you can come in sugar. Otherwise, you should not. Number three, as far as the overall industry scenario is concerned, we are positive on sugar at this stage. We believe that there is significant, opportunity and valuation upside possible from this industry at this stage. So one can look at multiple companies, but we do like EID Parry. You get an exposure to Coromandel International as well through this. So EID Parry is our pick in this sector.
All right, so that's the take coming in on the sugar space and select counters that Sudeep just highlighted. But with this, Sudeep, we let you go on that. Thank you so much for taking the time out and speaking with us. Really appreciate that. But with this, viewers, let's also get you some of the tradable ideas and STBT, BTST ideas from our experts. And Kunal, over to you. Help us understand which are your closing trade ideas.
So I'll go with two buy calls. The first one is on Hudco. That's a chart which is coming back into a breakout. Managed to break past about the previous highs of 220, 225 zone. So we'd look out for 236 as a target for BTST for Hudco. The stop loss could be kept at 224. The second would be about Canara Bank. You can't take the PSU banks away because the way these stocks are showing signs of a synchronized breakout, I think is quite exceptional. Canara Bank, again today, I think the stock has confirmed that similar kind of a breakout about the previous highs of 115. So would suggest a buy with 125 as a target, stop us at 114.
On the stocks that Kunal is liking at the moment. Samal, what about you? Some BTST ideas you'd like to share with our viewers?
The first one I would like to mention is Kefin Tech. Kefin Tech looks good. Kefin Tech has slide a bit today. Just give me a second. Little bit flat today. Have broken out of a small inverted head and shoulder pattern and given a small breakout as well. Taken support at 200 daily moving average, high top, high bottom formation. Great setup. Stop loss should be around 1115 and the target should be around 1225. So that would be my BTST call for the day.
All right, so those are the calls coming in from both of our experts. Let's watch out for that. But with this, let me also welcome Nitin Ahuja on the show as well. Hi, Nitin. Good afternoon. And Nitin Rahija, I beg your pardon. Nitin, hi. Very good afternoon and good to be speaking with you. Firstly, help us with your take on the markets. How do you see this? Because the next week is going to be really exciting, especially from the consumer point of view. But do you believe that the excitement with respect to the GST reset is behind us?
Well, I think stock prices have already built that in expectation of post the cuts happening. If you see a lot of stocks are up 10%, 15, 20%, and so on and so forth. So a lot of that is built up, at least from a short-term perspective. My own view is that this is more of a longer-term trend because the impact of these cuts on consumption is going to play out over a period of time. And I think that along with low interest rates, low inflation, the tax changes that were made earlier in the budget should all result in consumption coming back pretty strongly, and that also consumption at the lower end of the lower K part of the consumption, which has been struggling all this while. So I think this festival season is very important from India's earnings growth perspective because the markets, if you look over the last 1 year, have given virtually no return. And that's primarily because the kind of slowdown that we saw in the GDP and economy was absolutely, it caught the market on the wrong foot. And hence you saw the markets adjusting to a slowing growth over this last 1 year period. And I think, so this particular festival season in that sense becomes very important.
Right. Okay. So that's the take coming in on the overall consumption space. But Nitin, also want to get your view on some of the sectors other than core consumption, your core staples or discretionary, where we've seen big GST cuts coming in, the likes of tires. You have auto banks in focus, and also insurance. Now, of course, after the news that we received of cuts on these sectors, the stocks have run up. But insurance is something that in a longer term would also reflect well for the company if more insurance premium is paid or like more insurance is subscribed to. Do you believe that insurance right now on the back of this GST cut is a slightly medium to long term positive story?
No, absolutely. I think we are very positive on that sector. And it's
Okay.
because, relatively, we are an underinsured nation, correct? And I think what happened in insurance, more than the GST, if you ask me, was the changes in the regulatory environment that took place over the last 1.5 year. All of that really impacted the profitability and the business models of different insurance companies. I think we are through with most of that regulatory overhang, which is now behind us. So in that sense, I think insurance is back. I think insurance should be a part of the core portfolios.
All right, that's the take coming in on the insurance space right now. But today is one of the days wherein FTSE quarterly changes. We will see the flows to come in today, and especially in the last half an hour, the adjustments were expected to be made, and select counters are reacting to that. I believe that it was Swiggy that is expected to see an inflow of almost $100 million as per Nuvama, and that stock was seen to be inching higher. Even Asian Paints is also in focus. But Kunal, particularly on Swiggy, what's your current chart check, given the fact that we have already seen quite a run-up in this particular counter off late and throughout the week? If I can check, the stock is already having a run-up of 8%. Where do you see the stock headed post this 455 levels?
Yeah, so far, I think for the month it's up 11%, but I think it's a good gain for the stock price because this comes or this brings the stock into, I think again, if I'm not wrong, fifth consecutive month of price uptrend. And 5 months back, the stock was tottering at 330 kind of a range. And now for the stock to try and make a comeback, with all the positive signs, that augurs really well for the price trends over the near to medium term. And it's been a very stable uptrend for a stock like Swiggy. It's not as if that the stock has gone through a V-shaped recovery and the pace has been very steep. It's been a very gradual recovery for the stock price, and it tends to go into that zone of an odd correction, consolidation, tries to just cool off from those highs and then come back into a moving average retracement. So I think for a short-term trader, this could be a classic blended opportunity where if you're looking to buy the stock in terms of a classic trend, riding the trend on the upside, then I think you'll have to just wait out for that point of retracements for the stock price. Currently, the support for the stock is around the 425 to 430 range. So which means that if in case the stock goes into such a similar process of retracement closer to that 430 range, that could be a good risk reward entry point for Swiggy.
Okay, so that's on Swiggy. But Saumil, while we're talking about Swiggy, I have to ask you about Eternal as well. It's only listed peer in this space. Give us a sense on the kind of move that we've seen on Eternal. Let's fire Eternal and let's fire a slightly longer term chart for Eternal, because I just want to see in the last 1 month, 3 months what the stock has done. Last 6 months, there it is, a 50% uptick, in fact, coming in on the stock almost in the last 6 months itself. 336 thereabouts. Saumil, I believe close to the fresh high for the stock. And are there any more upsides that you're seeing on the charts, or do you believe that after the kind of run-up the stock is seen, it's time for some cool down?
No, I think it will continue. In the medium term outlook, definitely. In the very short term, I don't expect it to keep going. I expect it to consolidate, take its time, take support at averages, do the retracement for the previous rally, and then start the next move up. So all this needs to happen for a healthy run-up, for a healthy uptrend. It's in the uptrend, long term, medium term, even in the short term, a great buy at these levels for a positional buy. I won't expect anyone to trade in the very short term, but in the positional trade, I think 320 should be the stop loss. And I think the next target would be around 360, 370 levels.
All right, so that's the take coming in on Eternal. Definitely what a move it has seen in the past 6 months. Almost a 50% jump is what we are getting to see. But time now to slip into a very short break. Don't go anywhere. Lots more to talk about on the other side as we count down to the market close.
Back with closing trades. You're catching us live from the SBI Live studio. About 10 minutes or so left for trade. We're seeing a block deal happening of 20 lakh shares on HDFC Bank towards the day's close. So 1% cut coming in on HDFC Bank on the back of that block deal. Well, yes, that's the update coming in from the market right now. But another stock that was in focus today, Shrishti, was Vodafone Idea. On the back of their AGR dues case, the Supreme Court verdict, and we can't call it a verdict exactly, it's actually a deferment coming in on that case, wherein the Supreme Court has said that the hearing has been deferred till next Friday. The dispute can't go on. There has to be some finality as well. What the DOT, the Department of Telecom, has said that they're hinting at some softening of stance and they're not opposing Vodafone Idea's plea. They also agree that some solution is required since government is such an equity holder, such a major equity holder in Vodafone. Remember all the recent fund infusion that has happened by the government in Vodafone Idea. So that is also important to watch out for. And they're saying that SE can also grant some indulgence, but well, it'll all have to be in a wait and watch mode till next Friday. Shrishti, interesting development coming in on Vodafone.
Well, yes, interesting development coming in, and the investors, or rather the traders, are taking cognizance of the fact that now the court is actually talking about to get some solution to what's been happening of late. But Nitin, wanted to have your take on this one, because we know that how the financials have been hit, how long this AGR case has been due. But once again, the stocks keep coming into the news flow and keeps reacting quite sharply to such news flows. But what is the sense that you are getting in from the statement made by the court today?
Look, whether without getting into the stock specifics, what I can tell you is that currently the way the sector is evolved, it's become four players, right? The three private sector and the one quasi-private sector and one government player. Now, the kind of investments into the infrastructure that have gone in place, the weaker players are going to, they might get respite, but they're going to struggle to try and match up to the larger players in terms of the kind of investments going on the ground and from a growth perspective. So, in my view, at the most, they could be sort of pump primed into becoming a potential M&A candidate at some stage. But I wouldn't read a lot beyond that.
Okay, so that's the take coming in on Vodafone. And Kunal, I understand the stock has been, rather subdued on the charts. But if you take a look at the percentage terms, even though in absolute rupee terms it's very nominal, but in the percentage term, the stock is up 7% today. Any chart check on Vodafone, even though it's at just 8 levels right now, but if you pull up the longer term chart, let's say about a month or so, it has gone up quite quickly from that 6 rupee per share to 8 rupee per share mark. That's the jump that we're seeing. So what's your take on Vodafone right now?
So this is interesting because this comes at a point when the stock is retested. I think last month or so, the stock managed to retest the previous supports in 2023, where it was almost at 5.5 or 6 odd rupees. The recent low for the stock was again, I think, around 6 or 6.1 mark for Vodafone Idea. Now, this month so far, the price gain is almost 29% for the stock price. Now, more importantly, the candlestick pattern which is formed for Vodafone Idea this month so far, of course, there are lot many days to go by for the end of this calendar month, but so far it looks like that it's forming a bullish engulfing pattern on the daily charts. Now, a very similar pattern had been observed twice for the stock price on the monthly charts. One was the spot which I'm saying for 2023, and from there the stock formed a base of 6.5 odd rupees and moved higher towards almost 15 mark over the next 10 to 12 months. And the second was, I think, mid of 2024, when the stock moved from, I think, 11.5 odd rupees to almost closer to 18.5 odd mark. So which means that such kind of a strong bullish engulfing pattern historically has actually played out very positive for Vodafone Idea over the medium to long term. The only catch over here is that the monthly closing has to have that kind of a pattern for the stock.
All right, so that's the take coming in on Vodafone Idea. Let's watch out for that. But along with that, some of these stocks are reacting very sharply to all the FTSE adjustments that we just announced. This one, the counter that we discussed back then, Swiggy, was actually one of the other counters that was seen to be buzzing. But along with that, Asian Paints too is in focus. A bit of a nosedive is what we have seen. But Bharti Airtel was also one of the other counters within the telecom space. That was expected to see an inflows, almost a 1% jump coming in over there. But on the flip side, very sharp movements coming in on likes of M&M, Titan, ICICI Bank and even Trent. These counters are down, and the biggest of all is actually HCL Tech, down almost 1.7%. But Soman, just wanted to have your take on some of these IT counters, because it's been a little bit of flip-flop throughout the week for the IT names. Specifically, what are you penciling in with respect to IT space? Will you be a buyer or seller, or no action at all?
Positionally, nothing, but in the very short term, definitely in for a small bounce. TCS would be my preferred pick in the large caps, and I'm expecting TCS to touch 3,300 as a target. It may go to 3,300, 3,375 levels, but 3,300 would be a short-term target, and I'm happy with that. In the mid cap space, I think KFin tag I've already given, but I should also mention Emphasis. Emphasis looks great as well on the charts, trading about 200 daily moving average, trading about the 20-40 daily moving average, high top, high bottom formation. Great setup. It may just dip a little bit in the very short term, but very strong support at 2,845. I'll be expecting Emphasis to go till at least 3,200 levels.
Coming in on the IT space, and Emphasis in particular is what Saumil is liking at this point. But Nitin, this particular week we have seen the renewed interest in the PSU banking space right now. What's your take on the banking names as per se, and will you be a buyer at these levels? Because some of these stocks have run up quite smartly. But the other big concern is with respect to the rate cut trajectory that we are in, the NIMs are expected to get hit in the coming quarters. What's your take? How are you looking at this space overall?
Look, I think one of the reasons we've seen the PSU banks run up is, you had this whole PSU Manthan, which happened, I think, over the last weekend. And they talked about how PSU banks have to play a very important role as far as growth is concerned, and in terms of restructuring, in terms of freedom of decision making, and so on and so forth. So are they cheap? Answer is yes, surely. Most PSU banks are trading just around book, even below book, and so on and so forth. And I do believe that most of them are also discounting the NIM compression, which should show signs of bottoming out in this current quarter. My own view, also further to add to that, is that given where we stand as far as post GST cuts, the government's room for fiscal maneuvering is going to get tighter. In which case, one of the options that is left for the government is to look back at the whole concept of disinvestment. And if you're doing that disinvestment, it's very important that your companies, which are the PSU companies, whether it's banks or otherwise, have enough operational freedom, are more competitive in the environment for you to be able to capture the best value when you're doing the disinvestment. So I think PSUs as a whole should look very interesting over the next 6 months.
Yes, of course. There was a PSU Manthan wherein many factors were discussed, how to make the PSU banking space global players going ahead. But if you look at the run-up overall, it has been very smart for some of these PSU banking stocks, because SBI was the star performer, followed by stocks like BOB, Union Bank to add to that list. And overall, PSU Bank was actually the top sectoral gainer in the week gone by with a 5% jump. And add to that is the realty pack as well. But Kunal, what's your current take on the realty counter? Any counter that is looking good to you right now?
So I think Godrej Properties is something which looks attractive. Prestige about the 1630, 1620 mark is also something which starts to look attractive. I strongly believe that yes, real estate stocks are showing some signs of a revival. The breakout is there for many of the stocks on the back of good volumes. So which means we may expect that many of these stocks can see a follow through. As of now, Godrej Properties and Prestige are the two stocks which I would be keenly focused on.
All right. Godrej Properties is something that Kunal is liking. But with this, thank you so much, Nitin, Somit, and Kunal for taking the time out and discussing markets with us. But with this, let me also hand over to Snehi to tell us that how did this week and the day shaped up for the Indian markets. Snehi.
Absolutely, Shrishti. Let's take a look at the trading session first on an individual basis. We'll talk about the week in a bit. If you take a look at what the Nifty has done, a 0.3% cut is something that we've seen. We started pretty okay, but we've seen a nosedive coming in from the day's high. 25,350 thereabouts is something that we're even struggling to hold on to right now. So about an 85-point cut coming in on the Nifty spot, 0.3% lower. Sensex seeing slightly more intensified cuts coming in about 0.5% lower, and as is the case with Nifty Bank as well. So you have HDFC Bank. We've seen a 20 lakh shares block deal taking place just a few minutes ago. So HDFC Bank is the stock under pressure right now. A 1.1% cut coming in on HDFC Bank, largely leading the Nifty Bank in the red right now. On the flip side, if you take a look at what the individual gainers and losers have been like today, all eyes have been on the Adani group of stocks. Adani Power, the biggest gainer from that basket, a 13% uptick coming in on that stock. Adani Enterprises, Adani Energy, you have Adani Green, Adani Total Gas. All of these stocks have been big performers, including Adani Ports in today's trading session. Adani Powers is the stock of the day in the entire basket of all the Adani group of stocks. 13.5% uptick is something that we're seeing on that front. Followed by that, you have SBI Life, IndusInd Bank, Shriram Finance, Bharti Airtel, SBI. That was some of the top gainers from the Nifty 50 group of stocks. On the flip side, some big pressure on HCL Tech, a 1.5% cut, similar for M&M, Titan Trent, ICICI Bank, Bajaj Auto, Kotak Bank and HDFC Bank. So largely, if you take a look at which the top sectoral gainers have been today, it's the case of PSU Bank, up 1.5%, lost all its luster yesterday, but regained that in just one trading session. Top sectoral gainer with the likes of Union Bank, UCO, Canara, PSB, Central Bank, all of them doing very well. That followed by Energy, Realty, Pharma, Metal. You had IT under some pressure, 0.3%, but the biggest cuts across Bank, FMCG, Auto and IT, where FMCG stocks, let's talk about them. Names like Colgate, Nestle, HUL, Britannia, ITC, United Breweries, all of them under pressure in today's trading session. So while that was the take coming in on the day, of course, Paytm was also another stock that was beaten down today. For the week, even despite the cuts today, Nifty has managed to close above that 1.5% intraday gain coming in, still in the positive on a week-to-date basis. So that's the take on the market for today, as well as the course of the week. With that, we'll wrap it up on this edition of today, as well as this week's closing on closing trades. Thanks so much for tuning in.
in association with SBI.